gas pricing, where is that headed? Now that the Religare committee will also look at that. Ballabh Modani of Religare Capital Market now joins in. Ballabh, hi, thanks for joining in. Let's start with the overall sense of the numbers, because quite clearly operationally the numbers disappointed a bit in terms of while the GRMs were okay, in terms of other businesses, oil and gas in particular was disappointing. What's your overall call on the stock now?
Really, what the market was expecting, that the market was expecting more than 56 billion of profit. So it has come exactly in line what the market was expecting, and the stock has actually moved up over the last 2-3 days. So I think it's a sort of disappointment because there was no beat on the market estimates. The main reason for that, I think clearly, refining continued to do well for them, but petchem was where the company disappointed. We were expecting little higher margins than what EBIT margins what they did last quarter, but in fact it was lower than that. So I think that spoiled the operating performance. At the bottom line, I think it was in line, but again it was largely led by other income, and it's very critical whether what kind of value you would like to assign to the other income.
Yeah, so the other problem that the market seems to be factoring in now is that while in Q4 they managed to do $10.1, they've already fallen to about $7.58, the GRMs that is. Should one be worried about the Q1 performance going forward?
Yeah, I think clearly the fall has been pretty sharp, and if you look at it from the highs of around $10 plus in the month of Jan and Feb, it has fallen to something like $4.50 right now. So I think clearly it will be reflected in the first quarter numbers. The other worry for Reliance is going to be the falling differentials between light and ultra heavy crude differentials, which has fallen to around $3.5, and again in the month of Jan and Feb it was as high as around $14 to $15. So I think both these factors put together, you will see pressure on the refining margins for Reliance in Q1.
Hi Ballabh, oil and gas production down, EBIT down. What's the call for the upstream business at all?
See, I think it is largely known. The whole issue is that the production is falling and the operating cost doesn't fall in the same proportion. So it was largely in line with what we were expecting. So I think there is not a disappointment. I think the guidance is critical for the E&P business, and where the Reliance has guided that they will try to stabilize the production by July of this. They will do workover program in July, and after that there will be some stability. So till then we will continue to see the production falling, and going in Q1 I think the numbers are going to be much lower than 19 MMSCMD what they did in Q4 of FY13. So I think it will continue to remain under pressure. What remains to be seen is how fast the government comes out with the gas price reforms, and that will provide some support to the stock.
Actually, that was my next question, Ballabh. Now what we hear is that the Religare committee will be looking at what Rangarajan committee recommended. Should the market assume that the gas price hike will be pushed because of elections beyond 2014?
No, I think it's India just can't afford to go loose on this subject. If you look at it, the production has already fallen big time, and if India wants to see any incremental production coming to the market, they need to revise the prices gas sooner than later. So I don't think election is going to make a lot of difference to it, because I think India just can't afford another year without a gas price reform, because for Reliance as well, their price is going to be applicable till the end of FY14. So before that itself the government need to decide about the subject. So I think we will hear about it in next 1 or 2 quarters itself.
So Ballabh, let's move on then from Reliance. What would be your top picks in the entire sector?
We continue to like ONGC because we firmly believe one is the fall in the crude oil prices that has been quite significant, and this is one of the stock in the E&P universe regionally which will benefit out of falling crude oil prices. The other thing is, I think, as I mentioned earlier, it is the gas price reform. India need to take a decision about increasing the gas prices, and if that happens, I think ONGC is a bigger beneficiary than Reliance. So I think both the verticals, what we see is that there is going to be earnings upgrade for ONGC for FY14-15. and that's the reason why we continue to like the stock. It's our top pick in the space.
Yeah, but what about all marketing companies now that crude is at 100 or even a tad below?
See, I think OMC is quite a tricky call. I think the major part of the reforms is already there, so it becomes quite critical that how strong our view on crude oil is. What I see is, I think it's more among the OMCs what we like is BPCL, followed by HPCL, because HPCL, if we want to play pure beta on the crude oil prices, I think HPCL is the best bet. But again, the nature of the commodity itself is quite volatile, so it becomes quite tricky.
Alright, Ballabh, thanks a lot for your time. That's the call on the oil and gas space and on Reliance in that particular space. Well, the markets are stable, so let's take a break. Once we come back, we'll get to some market opinion and also the stock that need to keep an eye on, Fresenius Kabi, and what really is happening on that particular stock.